welcome everyone. Nice to have you here today. So today we're doing the e-commerce seminar. So basically I'm just going to give an introduction to myself before we dive in, and just some house formalities. So if you could please ensure your phone's on silent, and just know that if you need to go to the bathroom, you can just go up the stairs, out the doors, and then to your left there's a couple bathrooms there. My name's Daniel, so I'm a full-time student at the University of Cape Town. I'm studying a Bachelor of Business Science, Finance with Accounting, but also what I've done besides that is that I've started 2 businesses, so I'll give you a brief introduction to both of them. So the first one is called Brandus, and what Brandus is that it's a marketing firm, but the whole point of Brandus is that it's aimed at university students in particular. And what it does is that we develop this technique called passive activation. So traditional activation is when you would find someone handing out a flyer or basically giving you a pamphlet or a sample. That's traditional activation. What we did is that we did something called passive activation. And what that happens is that we have 60 students around the country, so 10 in 6 different universities. And what would happen is that a company would approach us and they would actually give us t-shirts for those students to wear. And what they would do is that they would wear it for 2 weeks at a time. So the whole point is that they're passively activating your brand so that students are constantly getting in touch with your brand, and it's their friends. So your friends are basically encouraging a brand, and the whole purpose of Brandus is basically to influence your purchasing behavior. Because what we find is that university students come straight into uni, it's their first start of independence, and that's when they start formulating their own purchasing habits, they start finding brands that they like. So the whole point of Brandus is trying to solidify that relationship from the get-go. That's
not the same t-shirt that you wear for 2 weeks.
Sorry?
It's not the same t-shirt.
Yeah, not at all. You get 2 t-shirts. Anyway, that's Brandus. The next business that I have is an e-commerce store. This is called Cocoon. So Cocoon, we have 3 different things we do there. The first is student cocoons. So this is an example of a student cocoon. Basically what it is that it's a protective case for textbooks. So you can see the textbook inside, and it basically protects the flags of every textbook. What we find is that accounting students walk around with these books and they care about their flags not getting damaged. So the whole purpose of this is that the case closes and you can shake this thing, throw it around, but the book will stay intact and the flags won't get damaged. So I designed this, I approached the manufacturer, we manufacture it, we distributed it, and we've sold around the country. So that's the first aspect of Cocoon. The next thing we do with Cocoon is something called care cocoons. So it's basically a care package, like sweets or something you can send to someone. It's basically a gift. And the last thing we do is a mystery cocoon, and that's basically letting us buy gifts for your loved ones. So get different categories and whatnot, and we literally do the hard work for you, and then you reap all the benefits. So that's just the background into who I am and what I do. How the seminar is going to work, we have a whole bunch of different topics, and for those that aren't here, they're going to be watching the video later on. They've also bought a ticket, but they can be here. But the whole purpose is you get to be interactive with me. I would suggest that at the end of every slide, if you have a question, ask it. Otherwise, if you want to wait till the very end, then you can ask the question there as well. But otherwise, it's really great to have people here to interact with, so feel free if you have a question or if you disagree with something or whatever, challenge me. That's what today is for. Cool. So, context of e-commerce in South Africa. There's a lot of stuff happening here. We are a developing country, so it's going to be very interesting. I have a lot of stats to show you, but just keep in mind that this is a growing industry, and this is kind of where the opportunity is, it seems, currently for South Africa, especially looking at the trends of emerging economies in the context of the world. You find that developing countries that are moving into e-commerce, that's where the opportunity is, but it is a ruthless battle. There's a lot of competition there, but it can really pay off if you look at what happens in other countries. So some great stats we have here. This is particular to South Africa, is the internet usage. So we have about 31 million people who are active on the internet, all right? The whole purpose of these stats is to show you the market, how it looks like currently, and where it's going. So we have 31 million people that are internet users. That's about 54% of the population. So even within that, you can see that there is a big market, but it's not the entirety of South Africa. So we are still developing. which shows that there is much more growth that can occur. That's the most interesting stat there. The next big thing here is that only 69% of the population has an account with a financial institution, right? That's only 69%. Only 8.9% has a credit card. So e-commerce relies on credit cards. It's very fundamental to purchasing decisions online. So that's kind of a factor that needs to be taken into account. The next thing is that 14% makes online purchases or pays bills online, right? This is 14% of all the internet users, right? Okay, that's kind of the fundamental parts of that slide. The next thing we need to see here is 88% of the population that uses the internet searches to buy things online, okay? And you see that it says 55% purchase the product or service online. That is any kind of product. So it can be airtime, it can be any small item that you can get. So what you'll find is that the market is quite segmented, where there are a lot of people that are online, and there are a lot of people that do buy products. But when you look at that in the next slide, in terms of the overall economy, it's still quite small in terms of the total retail spend. So these are all in dollars, as you can see. So you can just times it by 15 to try and get the real value, but the economy is about worth 6 billion rand. That's how big pretty much this economy is. For some of these items, you can see there's quite a fundamental big thing there with the travel. That's $2.86 billion. That's quite a big market in South Africa, but if you look at other items that you kind of spend on a daily basis, you're looking at fashion and beauty, $500,000. You're looking at electronics and physical media, that's almost $1 billion. So there is quite a big market here, and when you start an e-commerce store, you're wanting to get a slice of this big pie. That's what you want to do. So these are kind of the markets where they are right now. You can kind of see where South Africa is interested in with their wallets. What are they purchasing? The biggest one is travel. That's what they're buying online, which is understandable. If people are wanting to travel overseas, they're going to want to do that online. This slide is very crazy because it shows that middle picture. It says e-commerce spend as a share of retail spend. Only 1% of all retail spend is done online. So that just shows you how small e-commerce is in South Africa, and there's a lot of opportunity for growth within that. So 1%, that's as far as it's gone right now, but it is growing. So I have some statistics that will show that from 2018 to 2019, there was a 106% increase in online spending. So big growth, as you can see in developing economies, that tends to happen, but very, very small fraction of the entire retail spend in South Africa. So there is opportunity here. That's not to say that it's going to be challenging, but there is opportunity, and that's kind of the whole purpose of this context here. This last slide with some statistics. 68% of people use mobile banking here in South Africa. 36% make mobile payments, right? And that last one, 11% own some form of cryptocurrency, which is just an interesting side note if you do want to adopt that into your website to start accepting that. So that's South Africa in a context from a stats perspective. Now I'm going to show you a visual. So this is from Shopify's statistics, and what it's showing here is Black Friday. So Black Friday happened last week, and this is showing basically the amount of sales per minute and the amount of orders per minute. So as you can see, there was $512,000 worth of sales per minute, and that was at transacting about 5,700 transactions. And if you can look at the map, you can see how busy and how many orders are taking place. So each of those lines actually show where an order was placed and where it's going to. And you can see America is quite active. There's a lot of orders coming internationally into America and leaving, right? That's the US. You can see in the top right corner, there's Europe in the background there. You can see how quite busy it is. Now I'm going to show you what Africa looks like. So this is Africa. It's very, very, it's not that busy at all in comparison to our neighbors, the other continents. But you can see there is some sort of transaction with South Africa. So if you watch this over time, you'll see that most of these big lines that are coming are going to South Africa. So we find ourselves kind of this emerging economy, this forefront of Africa as it is, and it really gives us an opportunity. So like I said, it's a 6 billion rand market in South Africa. From 2018 to 2019, there was 106% growth. This is particularly with Black Friday, and there were 7 million transactions that took place last week Friday. 7 million transactions. So it really shows you, if you're wanting to get into this online space, even getting a fraction of those can be very profitable. And this is just on a single day of the year. So what's great is that the average basket that was sold on Black Friday was worth 1,400 rand. So lots of baskets, lots of transactions, and the real battle is actually trying to get those to yourself. So that's what South Africa's context looks like. This is kind of just giving you a brief taste of what the seminar is going to be for. The whole purpose that we're going to try and do is try to show you how it looks like to have a business, where you need to start, where you need to go to, but to keep it in mind, these things as we go through. So I made a few big points here. The first big one is that 58% of respondents prefer to pay on card, right? 58%. These things you need to keep in mind as we go forward because it's very important. This is what they got this from 12,000 e-commerce shoppers, and this is how they kind of found these statistics. So if your business isn't revolving around these real statistics, there's going to be a problem, and we're going to struggle to plug into that big economy and pull some value. So 58% to use a card. Remember in the previous slides where I showed you how many people actually have a card. So it's already a minority. It's only 8.9% of South Africa that has a credit card, and of that, 58% prefer to use that as a form of payment on an e-commerce store. All right, the next big thing here is that 45% receive their online purchase within 1 to 2 working days. So it's a fast economy as well. Very, very fast. You're paying and you're getting it very soon. And it's kind of buying into this whole consumerism where it's instant gratification almost. So you buy it, you got it. So if you want to be in this market and you want to kind of challenge people, you need to have a fast delivery as well, and you need to have facilities to accept these type of payments that people are wanting to use. So that's the next interesting thing. The next big thing is that saving time, access to product reviews, special offers, and price comparisons are the main reasons online shoppers shop online. So what distinguishes retail shoppers that go into a mall from people that are buying online? It's those 4 factors, right? So they want to save time, they want to access reviews, right? When you're in a shop, you can't necessarily do that. You have to rely on external research, but on an online store, it's very easy to see a review of some sort. So that's another factor they're very interested in. The third thing is special offers. That's why we can see Black Friday was so popular last week. And the last thing is price comparisons, right? 72% use price comparisons online, right? Of these 12,000, 72% search products to see what was the cheapest. So you can see in South Africa, the real issue here is price, convenience, and saving time, right? The next big thing is that really what they're looking for is the cheaper delivery, a payment method they can trust, and an easy return policy. Those are the 3 most important improvements that an online store could have. Right, so the next last thing on this slide is that purchase discounts is an overriding incentive, which would incentivize people to buy online. So I've given you a taste of e-commerce in South Africa. I've shown you what it looks like, and I've shown you what people are looking for. The issue is, if you don't keep all of this in mind when you're setting up your online store, it's going to fail miserably because there's no traction. You're not buying into what the consumers want, and then there's not going to be any consumers in the store. So this is the most important issue. But on the flip side of that, I showed you that e-commerce in South Africa is only about 1% of retail spend, right? Now that's actually relatively to global spending and how global markets look like the US and the UK and the Eurozone and kind of the Far East. South Africa is only 1%. those markets are looking between 10 to 40% of their retail spend is online. So South Africa has a very slow economic growth, right, in terms of this e-commerce spend, which is very interesting because you would expect that an emerging economy with quick delivery and kind of relatively low prices, that would incentivize people to buy online. But there's 4 factors that really are contributing to the slower growth in South Africa. And the first one is shopping culture. So what we find is that South Africa is very concentrated with shops, and what actually happens is that residents are using shopping in malls as a way to kind of have fun. It's a way to enjoy their time, and this really just leads to this mall culture where people are just going to malls to shop, and there's not really, they could buy online and get that price maybe lower or something, but it really just doesn't compare to that type of enjoyment they're looking for. So, and the convenience of going so close to a mall. The second issue that leads to the slower growth is delivery costs. So you saw that the average delivery is between 1 to 2 working days. That's very, very expensive. So when you're pricing that into your online store, you're going to have a cheap product, but your shipping is going to be about 100 to 150 Rand to get that 1 to 2 day delivery. So there's an issue there. You're offering cheap products, but your shipping can sometimes be worth the value of your cart, or sometimes a large proportion of that. And that's very discouraging for shoppers. There's this term they use in the e-commerce industry called abandoned carts. And what that is where people go onto your store, they select the product, they fill in all their details, they fill in their billing details, and then they get to shipping and they see the price and they abandon because it's just too much. That's the issue here. The target market of South African e-commerce consumers, I'm going to give you more information about that later, but they are high-income individuals that are using e-commerce to buy and sell, well, actually just to buy products. So most of those people actually have cars. So the comparison of actually going to a shop is actually cheaper than spending 100 and 150 Rand to get something. So it's actually cheaper for these target consumers to go to a shop than it is to get it to their house. That's a big discouraging factor for slower economic growth. And actually, when you look at it, when you look at economies that are actually doing very well in terms of e-commerce, there you have a different, kind of a flip side, where public transport is much more available and people don't have cars to go and personally go to a shop and buy something. So that's where we see that e-commerce is so prevalent, because people are able to buy something and it's actually more convenient to have it delivered than for you yourself to go, because you would need to go on public transport, you would need to go out of your way essentially, you know. That's the second issue that leads to slower growth. The third issue is the postal services in South Africa. So the postal office is renowned for being slow and sometimes not having your parcel actually delivered. We actually had recently, in the last couple of years, we had a country actually embargo the postal service. It was one of the UK countries, I can't remember exactly. But they actually banned them from delivering into their country because of the rate of losing packages. And it just wasn't popular. They needed to protect their country's interests. So that's another issue, they're unreliable. And the last big one is trust. So it's very hard for South African consumers to trust buying online. And there's specifically a culture around when you're getting your salary to actually go and withdraw that fully in cash. So there's actually a distrust of financial institutions and banking accounts. They don't actually trust banks, so they're not going to trust banks to carry on your transaction on the website that you have. So that's another big disparaging factor that South Africans find. So with that said, we're going to really jump into the types of businesses that you can have as an online retailer. So the first one is an online-only retailer. So this is where your storefront is the only storefront. So you have a warehouse or some sort of distribution point, but consumers can't actually access your products unless they go online. So examples of this are like Spree, Superbalist. Those stores, you go onto their website and that's as far as it goes, right? The other one is the omni-channel retailer. So this is a kind of combination of a brick and mortar store combined with that online presence. So what they have is basically a warehouse and a storefront there, but you can also go online and buy from them directly. So examples of this are like Woolworths, Pick and Pay. You can go into Pick and Pay, but you can also buy online and they can deliver to you. So that's an example of the other type of business, the online only and the omni-channel. The last one, which is very interesting, is a marketplace. So we all know of different marketplaces like Takealot or Bid or Buy. So what that is basically they provide the infrastructure for suppliers to come onto their website and they will manage that for you. So the only thing they're basically doing is providing the service of allowing you to come onto their store. An example of this, which is very well known, is Uber. So Uber is actually a marketplace. They provide the infrastructure and all the drivers are suppliers that use that marketplace. And that's the same type of thing we see with Takealot, right? And we can see it with also with Macro, for instance. Those are marketplaces. And what's very cool about those, it kind of takes the risk out of having an online business because they already tracked so much traffic. But we'll get into that more later, where I'll kind of introduce you to a few of the different marketplaces that are available in South Africa and kind of the price that's involved there. So this slide, kind of a bit blurry, but this is the value chain overview of what it means to have an online store. What's great about this is that I'm going to take you through every single one of these blue squares here, and this is really all the foundation that you would need to start an online store and have that kind of presence. What I've developed is this framework. It's called the PEP framework. It's planning, executing, and performing. So this framework I find is really helpful for my online businesses. You never graduate from the framework. You always come back to one of those steps, so either planning, executing, or performing. But it's quite fundamental for understanding where you are in this chain here and what you need to do better. That's what the PEP framework is. You'll see though that the product stages have been excluded from this. So you start at the top with a website, marketing plugs into that, you have your order placed, then you have the payment with a payment gateway, then underneath that the order is processed, then there's the delivery. So to the left of the delivery you have the supply that plugs into your store, then you have warehousing, so where you're keeping that product, the delivery, picking from the warehouse, so there's a whole lot of packaging that goes into picking the warehouse and making sure it's able to be couriered. Then you have delivery, and then you have returns management. You'll notice that there's this orange line, it's website analytics, and then underneath at the bottom is third-party fulfillment or dropshipping. So I'm going to let you know all about what dropshipping is and how that works, because you can see it actually surpasses everything. It goes straight to delivery. You missed all that beginning part. Marketing, I'm also going to take you through what that looks like in South Africa and how to be effective with it. And website analytics, that's probably for another time. It's much more complicated to actually analyze that and trying to find real value from that. But that's what this value chain overview is. I've excluded the product stages because those would usually be plugged into the supply on the far left, distinctly for the reason that that's not the only real way you can have a business online. So I will go through what it looks like to start a product like I have and design it and cost it and manufacture it. But this is kind of just the foundation that really is quite synonymous with most online businesses. So depending on what you want to do, you can really tweak this around and make it your own. You want to kind of set yourself apart. So the first part of the framework is that planning stage, and failing to plan is planning to fail. We know that. So what's important about this is that you never stop planning. So even when you find yourself on the far end performing, your business is running, you're selling, you still want to always make sure that your planning is perfect and that you're looking into the future. And you're also looking into what you're doing wrong now, because you're not going to get it right the first time, and there's a very high possibility you're not going to get it right or perfect whilst you're going the full way. So here is a picture of the saturated market that is South Africa. So you'll see on the far left you have different stores, so a combination of omni-channel retailers, marketplaces, online retail only. But you'll see across the top is actually a whole bunch of different categories. So you have home, fashion, technology, books, everything. And you can see that all these big brands are all in those different places. Everyone is kind of trying to grab a portion of that, right? So now you think about it. Looking in the context of South Africa, 1% of all retail spend is done online, and of that 1%, it's segregated in all these different categories. Remember I showed you the different revenues per one, so you had travel that was at $2 billion. All of those are then segregated into these different categories with these different companies grabbing a piece of that. So there's a big case in South Africa to kind of provide this niche product that sets yourself apart from these. Because honestly, if you're going into a marketplace or some sort of business and you're wanting to sell home things, you're going to be competing against all these big guys. And although it is possible, it's extremely hard. And you have to make sure you set yourself apart from these guys in some sort of way or form. And that's why it's important to look at that foundation, because you need to tweak it to be attractive, right? You have to kind of solicit trust from users to get to you. You need to solicit trust for them to give you money, right? You need to solicit trust to actually deliver on what you promise. So this is the saturated market in South Africa. What we find in developing economies particularly is that entrepreneurship fails sometimes when it's not necessities based. So people will not look to your business unless it solves a certain necessity they have. So luxury entrepreneurship, as they call it, sometimes fails miserably in developing economies because consumers just can't justify giving you money for whatever kind of luxury you have, right? So necessities-driven entrepreneurship is kind of the way to go with entrepreneurship in specifically a developing economy like South Africa, because there's a much higher chance of success. It doesn't mean that if you have a luxury business that is going to fail just because it's luxury. You have many examples in South Africa that do well and they're a luxury, but that's because they're playing into a certain target demographic and they do that well. So if you do want to go the road of supplying some sort of luxury, you want to make sure that when you do it that you're actually offering real value, or like I'm saying, you're a niche product and it is something that people desire but they just can't have through any of these original sources. So that's the saturated market. This is the value proposition you want to give now. So at the top there you'll see I wrote creating a product, and at the very bottom is sourcing a product. Sourcing a product is an alternative to this whole, all these steps that I listed here. Sourcing a product can be much easier because it takes away all these cumbersome issues. The only problem with sourcing a product is that it takes away your quality control. You have no decisions on how that thing looks or what material is made of, what quality. You kind of have to just get what you get, really. Problem with that is that you don't really have an influence, but it is beneficial if you're just starting off and you don't want to do a big capital investment and you just want to go the road of sourcing, because then really takes out the pressure of creating your own product, and then if that own product fails, then you're kind of stuck with a whole bunch of stock and it's pretty much worthless. The other option is creating a product. So creating a product is great because it allows you to have full control over the process, and it gives you full control over presenting that product and creating the conversation around it. So I don't know if you guys know of any other products that have been imported, or think of some car or maybe something else. When you source a product like that, the conversation's already dominated because the conversation started. You have no control over what's been said about that, how it's been marketed already. Sometimes if that product already has had an influence, that's as far as it goes, and you can't really change that unless you have a huge marketing budget, which you're probably not going to have if you're just starting off. But by creating a product, you remove that problem entirely, because you coming to the market and saying, you have this problem I've identified, and the best way to go about to solve that is through this product or this service that I've created. So that's why I like creating a product, if you're going to go that route. If you're going to be offering a service, then having an e-commerce store is maybe not the best thing what you would like to do. I do offer alternatives where you create an online website and you kind of list yourself there. But an e-commerce store is really about going onto it, selecting a product you want to buy, adding it to cart, putting in your delivery address, and then it being shipped to you. That's the stock standard definition of an e-commerce store, which plays into creating a product. If you're not creating a product, then you pretty much just need to worry about how that website looks like, which you can use some of the tools that I'll give later on. But like I was saying here, you need to identify a problem first. It needs to be a problem that is not just your problem. So it needs to be quite a common problem, and that's basically where this Cocoon box came from, because I saw there were lots of students like myself who were struggling with the textbooks. They were carrying it around, it was getting dirty, it was getting wet. That's a problem that people face, and they face it every single year. So there's a market for it. It's not a once-off thing. The design, it really comes to you being creative with that. So for instance, with me, I spend a lot of time designing to try and make sure it looks good and to try and make sure it's functional. And what often happened with me is that I was actually in contact with a manufacturer consistently throughout that process. So I didn't do it by myself. The last step is marketing and feedback. You have to be constantly speaking to people about your product and showing them how it looks like, showing them what would they think about it, how much would they pay for it, where do they think it would be a good idea to use. These are all very, very important aspects of creating a product. When you go into manufacturing, you want to make sure you always have a contract in place. It's fundamental to have a contract so that when you're going forward and things change, it kind of solidifies the relationship with whoever your manufacturer is. And the best way to find a manufacturer is to do a lot of research and kind of see what's the best way to go. Costing is probably the most important part of this creating a product, and I'll go into it later, just so we have more time with that. So if you remember back to that value chain overview, there was that part at the very bottom that secluded the rest of the chain, and it was dropshipping. So dropshipping is a very interesting model because what it does is, you can see in the first picture, you have a customer on the far left. They pay money to your business, which is in the middle, and then what you do is that you buy that product that you've shown from the supplier, who will then deliver it directly to the customer. So the advantage of dropshipping is that you never touch the product. Basically what you are doing is you are an advertiser for that product. So a manufacturer will create whatever products they want, and what you would do is that you would basically source it, but not having it on hand, and you would send it directly to the customer. So dropshipping can be very hard in South Africa. It's very hard to basically, there's a lot of regulations, let me just say, that are in place that are not very favorable towards dropshipping. But that doesn't stop South Africans from actually creating dropshipping stores and shipping to countries outside of the continent. So it's actually very popular with shipping to the Eurozone and the US. It's very popular because South Africans kind of just plug themselves in with their stores with a lot of advertising, focused advertising, and it just seems to be a model that works overseas. In South Africa, it's not a very profitable venture. There are some that have managed to get around some sort of regulation, but that's as far as dropshipping goes. So, like I was saying earlier, it's important to know your customer. So, if you look at the South African target demographic, you see that most of them are higher income levels, but are time poor. So these are the people that are going onto e-commerce stores and buying online goods. So they have higher income, they usually work full time, and their income is about 30,000 Rand, 35% earn above that. So going back to what I was talking about, the convenience factor, this is kind of an option when you're looking at a customer to say, okay, they have no time, what can I do to change that in terms of the value that I'm offering? And it's very important to know your customer. So this here is very general. So it's not going to work for every store. This is very, very generic. and you would need to do more research into your specific customer you're looking to attract. But for this one in particular, this is just the general overview of the target consumers in South Africa who spend the most amount of time online wanting to buy goods. So know your customer, do market research. Earlier on, I was talking about costing when you're creating a product. So for those that aren't accountants or studying accountancy or have a knowledge of that, when you look at a cost of a product, it's in two categories. There's this variable component and there's a fixed component. So the variable component changes with production, right? When you think of that, you'll think of, let's say you're making a box. The variable component of that is how much wood you would use per box, right? It'll change. That's the variable cost of that. A fixed cost that'll go into products is things like rent, right? You would say. It doesn't change with how many you produce, and it stays constant. When you are costing your products, you need to keep both of these in line and in mind, because you can't just cost based on the variable proportion. You'll have lower costs, but it's not going to really work well, because then you're not actually going to end up making a loss. So variable part of your costing, you're going to live on this kind of this margin. So let's say you have something for 100 Rand, this box, let's say is 100 Rand. Let's say the variable costs make up 50 Rand. So if you look at it from just the bird's kind of look, you'll see that there's this 50 Rand difference between the actual selling price and your variable portion. That 50 Rand needs to go towards covering your fixed costs. And there's this point they talk about, which is break-even cost. So that's that difference that's deciding how many units you need to make to cover your fixed portion of your costs. And thereafter, any amount that's left over will actually go towards profit. This is very important when you're starting off, because a common cause for startups failing, particularly in South Africa, is cash burn. So you have this cash that you start off with, you plan meticulously, like I was saying, but then you find that you're not actually making a profit, or cash is just disappearing and you don't know where it's going. That's why this slide is so important, because you as a business need to know for sure where that money is going, how much you need to cover certain costs, and whether or not you're actually going to be able to make a profit based off of your targets that you've set out from the get-go. That's costing. Very important for your understanding. The next big part of planning is your product presentation. So this picture I chose in particular because it's all chairs, all different colors, and if you remember that saturated market slide, lots of people selling them. So if you want to make a chair that's red, you need to set yourself apart from the rest of the market, because it's very saturated. And that's why product presentation is very important, particularly on your site and the way you show it on advertising. What's important you need to do is to be clean with how you present your product. You need to be to the point, and you need to be attractive and useful, right? Even toilet brushes need to be attractive for consumers to buy it. It needs to even show how useful it can be. So there's this dynamism that kind of goes in with product presentation, where you need to be attractive if that is the goal of your product, but you also need to show use and utility if that's the other aspect of your product. You need to differentiate from the market. That's basically the underlying thing here. And when you look at websites in particular, I'll show you examples of different products, but we need to actually show the consumer that this is a nice product, and they also need to kind of buy into that shopping culture that South Africans have, where they have fun shopping. So you want to buy into that, have a very appealing experience, that when they go through your website, they're actually having a great time, That's the kind of user experience that you're after. People are having a great time because that means they'll spend more time on your store. There's another term in e-commerce that they use called the bounce rate. So the bounce rate is when someone comes onto your store and they only look at one page, the one they landed on, and they leave. And bounce rate is a big problem with e-commerce, because you spend so much time on your home page, which is probably going to be your landing page. So when people put in your website, www.cocoon.co.za, that first homepage, if it's not appealing aesthetically and it doesn't draw in people, they're not going to look at your shop. And that's actually where the money is. That's actually what you want them to spend time on. So that's why product presentation is fundamental. And like I was saying, you never graduate from this framework. So you're always going back, right? The consumer market changes, so you need to adapt with that. What we're finding now in this current stage, going into the next decade, is that minimalism is very, very popular with e-commerce. People love to have this simple experience, not oversaturating the page that you have, actually just showing the product that people want. That's minimalism. It's very popular going into this new decade. So it's important to kind of keep that in mind when you're planning how your store is going to look like, how you're going to show your products, where you're going to show your products. Is your product actually an attractive one, or is it just a useful one? And then playing into those strengths of whatever your product is. Okay, here are the real crux of starting a business, is making decisions about how you want to approach it. So this is registering your business, and you do it through the CIPC. So as you can see on the far left, there's a few categories like the legal entity, liability, business registration, tax registration, the tax, financial statements, and pay as you earn. And at the very top, you'll see the two columns are sole proprietor and a private company. So when you start a business, you want to decide what is the best way for me to have this vehicle. Because what a business is it's just a vehicle that you are driving. And you want to have the best vehicle possible because, like I was saying, cash burn is a very detrimental thing for startups, and they fail if they don't have the right vehicle. Sole proprietorship, what's great about that is the sliding tax tables and rebates. So if you don't know what that is, when you are earning an income, SARs have different income categories that you fall into depending on your income, and you will pay a tax proportionate to the amount that they want you to pay. So if you, for instance, simplifying it, earning between 0 and 100,000 Rand, you're going to pay a certain amount of tax. And I'll explain why it's a main benefit. The main benefit is that when you do that, you kind of play into the advantage of starting up. When you're starting up, you're not earning as much income as big businesses would. And what that allows you to do is that you fall into lower income categories and you actually end up paying lower tax on profits you make. That's an advantage because rather than a company pays a flat tax of 28% on any profits. So you can actually find that if you're a sole proprietor and you're earning 100,000 Rand, for instance, you're going to maybe end up paying 4.5% tax when you take off rebates. So rebates are just these tax incentives government gives if you a certain age, they'll deduct it from your taxable income. An advantage of being a sole proprietor is that you earn, let's say, 100,000 Rand starting off, then you get a rebate that government gives you, which lowers your taxable amount, and you end up paying lower tax in general. The flip side to this is a company, and you pay 28% regardless of how much profit you make. So your tax rate is always going to be 28% unless you have some sort of deductions that you take into account. But that's not necessarily what you're going to face just starting up. So that's what a main benefit of being a sole proprietor is, especially starting up and earning lower incomes, right? The advantage to have a company only really kicks in when you're earning plus R1 million. So for me, I would say the benefit when you're starting off is to actually start as a sole proprietor, and when income actually starts kicking in, to start considering the tax advantage of occupying different vehicles. So the sole proprietor is a vehicle that you can use for a certain amount of time. The flip side of that is that there is liability that comes with that. So like I said, a vehicle, a sole proprietor, you are your own vehicle. You can't leave your own vehicle, it's you. So when you take credit and liabilities and you assume it for your business, it gets plugged onto your vehicle, but you can't leave that, it's your own vehicle. that's the issue that comes with having liability as a sole proprietor, that it's tied to your name. When it comes to a company, there is advantage when it comes to liability because that's just a separate vehicle that you can get into. So the vehicle analogy is just useful for understanding that that debt is tied to that vehicle. If you're a company, that's where the problems are going to go to with creditors and stuff if you can't end up paying. As long as you can show that you weren't being fraudulent or you were trying to do like malfeasance, take advantage with bad intentions. So that's the difference in terms of liability. The sole proprietorship does have less admin. So you just have to worry about your own income and paying your own personal income tax. With a company, registering that comes with a whole bunch of different admin, particularly with registering. And then it also comes with doing annual audits, depending on what type of company you are. But that's really the advantage of being a sole proprietor, is that you have less admin. A great advantage of a company is perpetual lifespan. So what that means is that your company, your vehicle never dies. Your personal vehicle dies with you. Your company can continue forever, as long as you have shareholders and directors, and you just continue that lifespan. So this is a very elaborate slide. So I will make this available to you guys afterwards, all these slides, so that you can look through it, because it's very content heavy. But those are the main differences and main advantages that you would look for as a startup, like what kind of opportunity you want to take. All right. Does anyone have questions about registering a business? Cool. The next topic to talk about is value-added tax. So you'll notice that VAT is on everything, and what VAT is that it's actually it's a tax on the value you have added to a product. What that means and how it looks like is, let's say an example, you buy a product for 10 Rand, there's a VAT of 1.50 Rand on it. That's 15%, okay? Very simple so far. You take that 10 Rand product and you sell it for 100 Rand, plus a VAT of 15 Rand. You can see the total VAT you would pay is the difference between that 15 to that 1.50 Rand. So that's 13.50 Rand. The reason why, it's a tax on the value you've added. You bought it for 10 Rand, you sold it for 100, your margin is 90 Rand, 15% of that 90 Rand is 13.50 Rand. So you see how it's a tax on the value you've added. It's government's way of kind of putting themselves in the value chain and receiving revenue from it. So some people actually say that VAT is a tax on the poor, because the poor pay proportionally more VAT than higher income earners do relative to their salary. In terms of VAT though for you, that's the background. In terms of VAT for you, it's only compulsory if you're earning revenue turnover of 1 million Rand or more a year. So what's very interesting that I've noticed is that there's a lot of kind of these, what would you call it, like ceilings, let's say, at about 1 million Rand. So when you start hitting about 1 million Rand revenue, that's when I would say it's important to start looking into that and company registration and all these other very important things, because you don't want to be bogged down with time spent in administration, because you're not going to have enough time to spend on things that actually really matter to the customer. As a startup, you want to focus on spending your time on things that matter and create value. These things don't necessarily create value at the get-go. There is voluntary registration though, should you choose to go the VAT route, and that's if you earn more than 50,000 Rand, but less than 1 million Rand in the past 12 months. But what they've done, which is very weird, is that if you have taxable supplies of up to 4,200 Rand in any given month of that year, you can still apply. So they've kind of set this soft limit of 50,000 Rand, but if you do have taxable supplies of 4,200 Rand, then you are able to register for VAT. What are the benefits? Well, there's a few. So you get a VAT registration number, which companies that have VAT themselves absolutely love, because that means that you can reclaim VAT. and you can claim VAT refunds. So you end up actually paying that to the government, R13.50, but you can actually claim some of that back. So I'm not going to get too technical into how that looks or how much you get back, but it is a benefit because you actually end up getting some money back for your business, which is great. And it's kind of one of those things you would look at when you are working at a much higher level with revenue and whatnot. A good thing, which is kind of whatever you take from that, is it does give a good business image, shows you're established, kind of know what you're doing, especially if you're working with manufacturers or you're working with big corporates, maybe you're supplying something to them. There's different types of businesses you can have, business to consumer, business to business. It's just how you sell your product or service. And specifically when you're dealing with big corporates, they have their own VAT registration. So when you also have that, you just become a part of the chain and it allows you to reclaim some of that lost revenue, you could say. So that's that. I wouldn't worry about it too much from the get-go, but it is something to consider later on down the line, especially maybe if you want to start off with big corporates as you're just starting off your business. This is something to consider. So the next important thing to understand is Black economic empowerment. So what this is, from a human aspect, is about equality and redressing issues from the past, right? This is what BEE is about. What you won't know is the economic backing for BEE and why actually having a BEE program is actually quite beneficial to an economy, especially like South Africa. So not to be political or saying what's right or what's wrong, but from an economic standpoint, what BEE tries to redress is something that is actually very bad for an economy. So what happened in apartheid South Africa is that all the wealth was sourced to a few individuals, the white people, and that's not good for an economy because how it looks like is a whole economy trying to stand off of the back of a few high net worth individuals. So your wealth isn't distributed well, which means it can't be utilized well. That's what BEE is trying to redress. So it's trying to take this pyramid where all the wealth is sourced through a few people at the bottom, and it's trying to turn it on its head so that it benefits the majority of the population which was oppressed. Because what happens then is that when there's more income and wealth distributed, it means that there's higher opportunity for empowerment and basically building the economy. That's what BEE is actually trying to do. It has this kind of two-side thing. It wants to address issues from the past, but also looking for what's the best of the economy. It wants to actually help grow the economy in the best way possible, and that's actually putting money in the most amount of hands, because then you have the most amount of people utilizing that money for economic growth, right? That's what BEE is from an economic standpoint. So there is a lot of cases for how BEE is a good idea from the get-go, but it wasn't actually utilized well in South Africa. So for instance, it talks about how its whole purpose was to help previously disadvantaged communities, but then it helps a few individuals who managed to get into the system who were previously disadvantaged, but then it kind of sticks with them and leaves the rest behind because they've kind of cracked the code or understood how to really utilize it and get the most benefit out of it. So that's BEE. There is case for how to reform it to make it better, but from this standpoint, it's just trying to basically grow South Africa. For your knowledge and what you need to decide for your business is there's two phases of BEE, and this is not very commonly known, but the first phase is that it encourages public and private companies to implement BEE initiatives. So going into that vision of growing the economy, what it wants to do is actually encourage all businesses to partake in it. That's the first phase of BEE. The second phase is this scorecard that they've developed. So you'll know about that. You'll know about level 1, level 2, level 3, and so on and so forth. That's the incentive that they've put in. So the first is kind of this claim, like, come and join us, let's help the economy together. The second one is that incentive they attach towards it as well. So what that means for your business is that if you have especially if you're going to register your business or you're going to be dealing with government entities or organs of state, so like your president or vice president or any of those type of people, those are organs of state, then this BEE would be very, very beneficial for you going into those spaces. Otherwise, they're not going to even consider your business, right? This is kind of a prerequisite when you're dealing with government entities. But sometimes there are BEE initiatives between intercompany transactions. So you would actually want to, if you're going to be on a large scale, depending on the type of market you're into, you might want to register BEE and then get that grade so that you have that access. You don't want to deny yourself access from the get-go because that's already detrimental to your business. So that is BEE in a nutshell. It only really applies, I would say, like I said, if you're going to register your company and deal with government entities, if that is your product or service you're offering. The next thing is UIF. So this is if you have an employee. So an employee, in terms of the Labor Act, is someone who helps you in the business that you do and is paid for it. So it's not a contractor. A contractor is kind of this, you paying an intermediary for access to that contractor. An employee is that who you're paying directly to help you do business. So you only need to worry about paying UIF if you have an employee and if they work less than 24 hours a month, you don't worry about UIF. If you are employing someone though, you do need to worry about pay as you earn, and you need to start paying that towards them. But there are different levels, and this seminar is not going to really go into that in detail, but it's just to introduce you to this so that when you're starting your own business and if you have any employees, that you do know you have to look into these things. So this is a very summarized version of what you need to look into. So like I was saying, an employee is excluded if they work less than 24 hours a month, and there's a whole bunch of other things that you need to worry about. If it does apply to you, then all you need to do is register your UIF contributions with SARS, and it's not actually a big thing. If your employee is earning more than 14,872 Rand, then the contribution is 148 Rand 72 cents. And you're paying the contribution and your employee is. So it's kind of this 2% that's going towards UIF. That's pretty much as far as you need to know if you're going to have an employee and get that side. Cool. Going back to now the e-commerce side, the online presence is domains and trust. So there's kind of a case for your domain name, and it's very important to have a great domain name because that's what people are going to be looking into the most when they interact with your business. So if you want to sell locally products, there is prestige with having a .com. It always feels great to have a .com, but if you want to solicit trust with your target demographic, and they are South Africans only, then there is a case for only having a .co.za domain extension. So that's just the last part of your domain. There is a case for that. That being said, you can have a .com or any other type of extension if it plays into your business. So if you see yourself having an international presence, maybe you want to export to other countries, which is possible, then doing a .com is much better, even if you're going to be selling to South Africans, because you want to solicit trust overseas. How domain names are priced is based on the name that you have and the extension. So the name, for instance, goes at a premium. So some premium names are very short and they're memorable. So having a hello.com, for instance, can be 100,000 Rand for that domain name. Just simple hello.com. If you're going to have like, hello, my name is Daniel.co.za, you're going to be paying 80 Rand for a domain name. So you can see with your domain names, it really just depends, but you can see having a hello.com can sometimes be more advantageous than saying, hello, I'm Daniel.co.za. But it really just pays into you doing some market research, seeing who is your target market, where are they, what is going to be memorable for them. And that's kind of what you want to do with a domain name. In South Africa, there are a few places you can get a domain name, and I've listed the different places here. So you have registerdomain.co.za, domains.co.za, GoDaddy, and Host Africa. When you're going to get one, it doesn't matter really where you get it from, as long as you're getting it for like the cheapest, basically. So when you're doing it .co.za, what's great here is that you can transfer it for free. So for instance, I'll introduce you to GoDaddy now. If you buy your domain at domains.co.za, you can transfer that for free to GoDaddy. So you want to get it for the cheapest possible rate that you can get it for, right? There's no point going to some other place and buying it for more expensive if it's available. Because the domains is kind of like a marketplace. People have access to it, and they kind of all give different prices sometimes depending on demand and how they value that name. And then they would buy it and it would be yours. But you can transfer it. It's not technically advanced. You don't need to be a tech maniac to do it. It's just a few buttons and you've transferred it to your preferred place. And why I'm talking about transferring is because a lot of these domain providers actually allow you to create a website using their interface, which is a great advantage if you're going to be with them, but it's not a detrimental factor if you say, oh, I want to make one with GoDaddy, but I registered here on domains. You know, it's not going to make sense, but you can just transfer. So that's as far as you need to know. Email is very important for having an e-commerce store. It's all about soliciting trust. You can't have like this @gmail.com for your store. It's not very professional and it's not showing that you're very serious. So what I would recommend is getting the professional email individual plan from GoDaddy. It's 12 Rand a month and you get a domain name address. So like sales@cocoon.co.za, Daniel@cocoon.co.za. These are all valid email addresses, and this plan is pretty much great because you can work with Gmail, can work with whatever you want. It's just about getting that trust going. That's what's important. All the way at the beginning, remember, when we're looking at the context of e-commerce, trust is a big factor. So you don't want to put anything in the way that's a stumbling block for those people, especially if they're going to land on your page. You don't want them to bounce. You want them to stay. So everything you can show on that page to keep them there is great. So soliciting trust by showing sales at your domain, putting a number, you know, having a certificate, this SSL certificate shows that your site is safe. You know, those things come with a domain, but this is just about showing that you're real, you know, and you do take this seriously. That's email. So that is planning. I think what we're going to do is take a 5-minute break, and then we're going to jump into executing and performing and finish with some questions.